In today's video, I'll be covering Dash from a daily and weekly perspective time frame. The ticker symbol is DASH USD. One of the first things that comes out from the weekly chart here is we have a cup formation and a potential handle forming over here. So we need to be on the lookout from a longer term perspective for a cup with handle pattern, and it's a multi-year type of base. So the potential upside will be significant. It's interesting to note that this base starts back in 2017. So it's been a long time in the making. And obviously there's, for patient investors, maybe it will pay off moving forward. When we zoom in a little bit here, you see a couple of interesting things stand out. One is the resistance being supplied by the 50-week simple moving average, which is 152.65. And that actually also, you can see there's resistance that's been formalized at the upper support line of the descending channel, which I'll show you a closer view on the daily chart. So from a broader perspective, you can see here a cup with a potential handle developing with very bullish long-term implications if we do have a trigger above the high of the candle around 495.66. On a daily basis, you'll see the descending parallel channel here. Now we've tried on the 19th, which actually was before we had the tremendous day yesterday, try to break out of the descending channel, but we failed to get a daily close. And it's one of the reasons why I recommend a lot of times that you look for daily closes above resistance levels or support levels, because you will get these fake outs, bear traps, bull traps. And we saw it happen again here yesterday, an attempt to break out, and it failed. The upper resistance line of the channel actually strikes or is in line with the June 30th high of 151.89. So that clearly is providing some resistance at this point. If you're able to register a daily close above the upper resistance line of the descending channel, it should be free to travel to the 200-day simple moving average, which comes in at 35.57. After that, it's going to be difficult to press the position much higher. You see there's a lot of price compression just above the price congestion, just above the 200-day simple moving average. So it's going to be a struggle to get through that. And it also correlates with the April 23rd low. So there is going to be some work to be done above the 200-day, but it should be a simple move up to the 200-day if there's a daily close above the upper resistance line of the descending channel. On the downside, you can see here how the midline of the channel was a magnet for price, providing constant support for most of June and until the 19th, before we had the explosion up high. So really, unless there's a close below there, you have to be looking to buy against that midline if we don't get the daily close above there. And if we do get a daily close below there, the outcomes are pretty bearish. You'll be looking at a significant decline down to the lower line of the descending parallel channel. It's important to note here that we came very close to an oversold condition on the 16th, but we did get an impulsive move. Here we did get an oversold condition and we had a more meaningful move off there. And here we also had an oversold condition and a meaningful move there. So once again, you can see that the malaise of the cryptocurrency market, apart from what took place yesterday, is having a negative impact on individual cryptocurrencies and will continue to be awake. One of the things I want to show with this is put it on a bar chart, and you'll see here that the 19th was a bullish engulfing day, and on a weekly basis, this is actually a bullish engulfing week. So if we can register a close above the upper line of the descending channel and above the 50-day moving average, it's going to be a very bullish development for the pattern, and definitely you should look to add to the position following that. So, overall, things look moderately bullish, but I wouldn't be a buyer unless you get that daily close above the upper line of the descending channel. Let the cryptocurrency prove itself. There's no need to be in a rush. There's still a lot of work to be done in this pattern formation, and use discipline and use the levels correctly.